welcome back to Business 163, Personal Finance. We're now on video number 3 in this module on saving. And we've talked about, up to now, right? We've talked about, hey, everybody needs to save, and especially you need to save to build an emergency fund for those unexpected little surprises, as well as for any other goals that you want to have in your future financial life. So we know that it's necessary. We know where to start. Now the question is, when we start building savings, where should we put it? All right, what type of a bank account should we be using? And so this video I'm offering to you to at least compare 3 of the primary options that are out there for most people who want to save some money. So as you can see here, the title of this lecture is Bank Accounts. Let's take a look at some different types of bank accounts. This video is not necessarily designed to tell you what is the best bank account. No, rather, like a lot of stuff in this class, we're giving you information about pros and cons of some of the popular options, and you can weigh out what works best for you and your life. So, what are we going to talk about? Well, traditional banks versus credit unions versus an online savings account. Those are all now contemporary options for you. And as you might guess, a traditional national bank like Bank America or Chase or Wells Fargo, if you open an account with them, well, of course, you have hundreds, if not thousands of branches across the state and across the country that you have convenient access, right? And so you can find them all over the place if you need to talk to them. No matter where you go, typically there will be a branch somewhere within driving distance. That is one of the great advantages of having your banking done at a traditional bank, right? Not only that, but of course they have a long, long history of dealing with traditional customers. And so many times, not always, but many times that works to our advantage. Thus, there is the traditional bank option. There is also the credit union option. Some of you may be familiar or already a member of a credit union. Credit unions are also insured institutions, and so your account is protected by some level of insurance. Typically, credit unions will pay a little bit higher interest on savings accounts than traditional banks. Now, I mean, not a ton more, but a little bit. And many times credit unions will offer, because they cater to their members, will offer far better customer service than you might find in your typical traditional bank setting. Again, these are generalities. It's not always true, but these are some of the reasons why many people belong to credit unions. And then finally, the new option on the scene is the purely online savings account. There are online companies that offer savings accounts. One of the advantages of the online savings account is, of course, they will pay much, much higher interest than a traditional bank's savings account. The downside, of course, is that there's no physical branch for you to walk into, and therefore you have to be very comfortable having everything in the cloud. I mean, they do offer many of the things of a traditional savings account, regular statements, ease of contacting customer service, but there is no physical branch you can go into, and some people find that a little off-putting. But those are at least 3 options of where do we want to put our savings. Some other things to consider, wherever you end up thinking about putting your savings account, and whatever type of account that you want to end up going with, some things to consider. You can see them listed here. You need to ask yourself and do some research as you are comparing options. For the options that you're considering, are there monthly account fees, and how do I avoid them? Is there a minimum required balance that I have to maintain in this account to keep it open or to avoid fees? I mean, if it drops below that amount, do I get charged extra? Hey, what's the interest rate they're actually paying for this account with the amount of money that I intend to deposit in the account? Are there limits on the number of monthly withdrawals? What if I need to exceed that number? Remember, if this is also going to comprise your emergency rainy day fund, it's quite possible on a rainy day you may need to make a withdrawal without really, keeping in mind the limit or the number of monthly withdrawals you've already made, right? And so that's a valid question. Hey, if I use it to pay bills online, do you charge me a fee? There are some accounts where if you use it for online bill paying, you can use it that way, but they charge you a little bit extra for every bill that you want to pay. Hey, if something goes really sideways, or I don't understand something, or I really have a customer service need, how do I get help? Can I drive to a local branch and talk to a human being? Do I have to deal with a call center? Do you deal only with emails and those? How do I get help if I ever need it? Hey, the whole reason, this last bullet point, the whole reason you're thinking of a savings account is to deposit money. How easy is it to deposit money into this account? How easy is it to withdraw money from the account? Those are all things, at least the bare minimum of things that you ought to be considering before you make a decision where you want to open a savings account at. Now, we're going to talk from here about 3 popular vehicles that are out there, and those are the traditional savings account, the money market account, and the certificate of deposit. Many people will choose one of those 3 vehicles, or maybe more than that, more than one of those vehicles to use for their savings account. So let's take them one at a time. Okay, so the first item, the traditional savings account. You can see the traditional savings account gives you easy access to your money without any kind of a penalty. Traditionally, we used to call these passbook savings accounts because all your deposits were written down by hand into a little tiny book that kept a record of your deposits. And so these passbook or traditional savings accounts, they are ideal for your first savings account. If you are a student or for your children, it's an easy way to get them started. And you can see there in the column there, in the table I provided, some of the pros to the traditional savings account, some advantages. Typically, you only need a very, very small initial deposit to open the account. And some banks, especially for children, there is no minimum amount you need to open the account. You can open it with $1. Often there's no fees. Most traditional savings accounts, there's no fees to maintain a minimum balance. And if they tell you there's a minimum balance or something, and there isn't a penalty for dropping below that. Often it's easy to transfer money to a linked checking account, even electronically using your computer or your phone. That's one of the great advantages of having a checking and savings account with the same institution. And typically with a traditional or a passbook savings account, there are no penalties or limitations on the number of withdrawals you can make in a regular monthly period. The primary con to the savings account is traditionally the passbook savings account has a very, very, very low, negligible interest rate. And therefore, it really serves as a convenient holding place, far more safe than keeping the money in cash under your mattress. But other than that, nobody really takes account of the interest that's being accumulated because the interest rate is so low. Okay, so that's really the traditional savings account. That's one option to place your savings and your emergency fund and those kinds of things. What's the second option? The second option is very, very popular, the money market account. The money market account is a little different than a passbook savings account. You can see it's good for those who don't need daily or weekly access to their money. And so typically for someone who's truly using it as a savings account and only occasionally needing to transfer money into the checking account to pay for things, that kind of a thing, right? It's better than the traditional passbook account for larger deposit amounts. And you can see the pros there. Why is it better for larger amounts? Well, because it pays a little bit higher interest. You can see there, the first advantage in the pro column. Oftentimes a money market account also has the ability to write checks directly out of the money market account. And that can be oftentimes useful. Also, to withdraw your money, there's typically no penalty within your monthly number of withdrawals. If you are still under that limit, there's no penalty for withdrawing your money. Now, The disadvantages or the cons, you can see them there in the right-hand column. Typically with a money market account compared to the savings account, traditional savings account, you're going to need a higher monthly balance to avoid fees. If you drop below that minimum balance, they're going to start charging you on a monthly basis. And so typically a money market account has a minimum threshold you need to maintain. In addition, there is typically a limitation on the number of monthly withdrawals you can make within any calendar month. If you exceed that, if you really do need to get to it, you can, but they're going to charge you. And so you got to be careful about that. In addition, there are lower interest rates if you drop out of a higher tier. In other words, they tier the interest rate they're going to pay you based upon different tiers of average monthly balances. You drop below that and they'll pay you lower interest. So you got to be careful about that. So you can see it's really better if you're going to have a larger amount in savings for some indefinite period of time. And then finally, the third vehicle that we discussed, we mentioned that we want to show you is the CD or certificate of deposit. Typically, CDs are structured so that you are depositing the amount for a set period of time. Many times that's either 3 months, 6 months, 12 months, maybe longer even than that. They have CDs that are available for anywhere from 3, 5, 10-year CDs. And the idea is you are depositing the money and you aren't intending to withdraw it or access it during that period of time. Because, as you can see there in the table, if you do, there are steep penalties for early withdrawals, for withdrawing the money before the period of time has elapsed. And the advantage of placing it in a CD with this kind of restriction is it pays higher interest rates than either the traditional savings account or the money market account. And for that higher interest, you are giving up the privilege of immediate liquid access to those funds at any time. So, depending on what you are saving for, depending on how many different savings accounts you have, there may be some sum you are willing to put into a certificate of deposit because you really feel, I'm not going to need this for this number of months. Just realize you will enjoy higher interest rates, but you really should have that stashed away and you're not intending to touch it at all until the certificate of deposit matures. Now, basic advice, when you're considering opening a savings account, as always, comparison shop. As with most financial services, it pays to compare your options and shop around. Just because a particular bank is close to you physically doesn't mean it's the best option. Just because the staff are friendly doesn't make it the best option. You really do want to consider several different options. Ask the questions that I gave you before, right? Really make sure it's the option that's going to fit for you and your intent and for your lifestyle, because there are more options than ever before you. Lots of different ways for you to compare, all right? So, just a basic overview of some of the savings account options that are out there for us. Typically, there's an option that works for each one of us in terms of our emergency fund, saving for long-term purchase goals and those kinds of things. The real key to this is understanding, reading the fine print, know how each of these vehicles actually works, both the advantages and the disadvantages, and making sure they fit what you want for your savings account. All right? I hope that's helpful. We'll see you in the next lecture.